Hey guys, welcome back to Laptop Trader channel on YouTube. My name is Philip. I'll be hosting this presentation. Again, I'm here to share my trading experiences and give back to the stock trading community one video at a time. This is going to be an update to last week's March 2026 market review. This is going to be an update based on current events. Again, my email contact if you have questions is laptoptraderphil at gmail.com, laptoptraderphil@gmail.com with any questions. This video is for information only and should not be considered investing advice. Please seek help from a professional investment advisor if you need help. Caution, trade at your own risk. Most stock traders lose money. Please protect yourself at all times. Any stock suggestions are up to you to decide if that is appropriate for you. Good luck and God bless. Again, invest in yourself before you invest in the markets, okay? So let's get to some live charts. This is going to be about a 20-minute video of an update on current markets and current market events. Quickly, Bitcoin is still in a weekly downtrend, trading below all the moving averages on a weekly chart. And daily, also still pretty much in a downtrend or a bottoming pattern. So that's where we're at right now on Bitcoin. Not much has changed there. As far as the S&P 500 ETF SPY, this has had quite a change over last week. Even though we've got this bounce with green candles, it still was trading below this 50-day moving average short term, and then gapped down Thursday, gapped down and closed down on Friday. And so now that's trading below the 100-day moving average in the S&P 500. Same with the Qs. This gapped up Wednesday, gapped down Thursday, and another gap down on Friday with a topping tail candle, closing below all these major moving averages for the Qs. The IWM ETF, again, looked pretty good until this week. Gapped up Wednesday, but then gapped down Thursday, gapped down Friday, closing below that 100-day moving average. So pretty quick change in these markets overall with a broad-based sell-off. Again, the diamonds gapped down last Friday, and then another gap down this Thursday and this Friday, closing below the 100-day moving average in the diamonds. IYT, the transport ETF, closing down. This looked pretty good until Thursday, closing down over 3% Thursday. Another gap down on Friday, over 3%, closing just above that 100-day moving average for transport stocks. Volatility has popped up very quickly. Again, this is quite reactionary. Closing up quickly this week up to over 29 points in the volatility index. So fear has entered the market short term. Again, we talked about last week how there could be a potential for a sell-off this week based on current events with a new war zone in Iran and the Middle East area. So I believe this was a catalyst or could be a catalyst, and it looks like this has become a catalyst for a market sell-off. So that's what we're seeing right now. So if you're seeing your investments go down in value this week, I think that's why. I think if you're a long-term investor, overall you should hold the course. Just stay the course, keep dollar cost averaging into your investments, and just especially if you're in your 20s or 30s or 40s, that you don't want to just sell out your investments based on fear. You want to continue to invest. If you're a short-term trader, you need to use extreme caution right now, and I can show you why. So let's look at mid-cap stocks selling off this week. We can look at small-cap stocks. Okay, selling off this week. Looked pretty good till about Wednesday. So very quick turn of events. If we look at these sector funds like energy, still in a major uptrend on energy. So energy being an uptrend is going to probably cost consumers and businesses more money, possibly inflationary. Whereas financials have entered and are still in a daily downtrend for financial stocks. That's bearish. Consumer discretionary sector still bearish, trading below all the moving averages. Healthcare sector, XLV, looked very good until this week. It went from trading over the moving average, the averages looking bullish until this week. Gap down Tuesday, gap down Thursday and Friday, closing below the 100-day moving average in healthcare. So hopefully that's short term for healthcare. That could bounce back. That will remain to be seen, as healthcare is generally a defensive area, but with a broad market sell-off, that is also selling off. Healthcare, technology stocks still in a downtrend. Utility stocks, along with energy, are still in an uptrend. So utilities up, energy up, kind of inflationary there. Industrial stocks look good until this week, selling off this week with the broad market sell-off in response to current events. Materials selling off this week, look good until Tuesday. The communications sector still kind of holding up in a sideways trend, so that is kind of a neutral area. Consumer staples stocks look good until this week, but still trading above the 50-day moving average. I would expect that to possibly turn around and go up, as that is also a defensive area, consumer staples. But that remains to be seen too, as part of a broad market sell-off. That could go either way. Real estate stocks are long-term sideways trend, moved up nicely. Actually closed near that short-term moving average. So real estate could be an area of early bullishness in real estate and a little bit of relative strength right now in real estate. So that is an area that remains to be seen which way that's going to go. So let's get to a few other areas. Dollar index moving up over the past couple weeks, indicating a little bit of strength in the dollar. Short-term 13-week interest rate. Also, right now, kind of neutral at 3.5. Long-term interest rates, as measured by the 10-year, creeping up here over the last week. So, with energy, commodities going up, it looks like this interest rates are going to be heading north for the short time in interest rates. Again, inflationary. I believe bearish for the economy. Bonds, as measured by TLT, went down this week. So that's kind of interesting how those two are inverse to each other. The retail sector looked okay until this week and then has sold off. So it was retail looking a little bit bearish. Semiconductors, which have been a growth area, are looking bearish this week, selling off this week, gap down on Friday. This was also a bullish area. These biotech ETFs, still pretty neutral. If that breaks the 100-day moving average, I would expect that to maybe take place in the sell-off. Blockchain ETF, bearish overall. Also internationally, Latin American ETF selling off this week. Look good until Monday and Tuesday. EWZ, which measures the Brazil market, looked good until Tuesday, sold off this week, probably also based on current events. Argentina selling off over the past couple weeks, closing below that 100-day moving average. Then we've got this ETF, oil services, in an uptrend, pulling back to short-term moving averages. That could continue higher for oil services. Natural gas fund, UNG, This could be an early area of bullishness for this fund. We had a major move up, we pulled back, but it looks like we've created this lower high area of support on a daily chart. Long term in natural gas, we can see this on a weekly chart, creating this what looks like to be a long-term low and possibly a higher low also on the daily and weekly chart. So that is an area of interest to watch as far as natural gas goes. Again, a commodity possibly moving up. We've got internet stocks, FDN, possibly making a long-term bottom with a gap up here, another gap up here, but that is still in a long-term downtrend, but that could be turning up. Software stocks have been sold off heavily in the last 4 months, possibly long-term bottom in software stocks. Here is an ETF that measures electric vehicles. Looked okay until this week, sold off Monday, Tuesday, Wednesday, Thursday, and Friday there. That could be a watch. Pharmaceuticals area selling off this week. So that looked okay as far as the sideways trend. New high last week, and then this week closing just above the 100-day moving average in pharmaceutical stocks. So not much is looking good. Travel ETF jets selling off significantly over the past couple weeks. Let's get to, this is an interesting ETF. The dividend ETF has had some relative strength. So this would be more stable, established companies that pay dividends. This ETF has held up so far, whereas the broad market, SCHB from Schwab, this broad market ETF has been selling off. Okay, so let's look at these indexes. New York Stock Composite Index selling off this week, creating some volatility. Okay, NASDAQ Composite has been selling off over the past couple weeks, creating volatility. SPX is the main benchmark, again selling off this week, creating volatility. Gap down on Friday, spiking the VIX. Okay, Dow Industrials Index and Dow Industrial Average selling off over the past couple weeks, closing well below the 100-day moving average. So this war conflict area in the Middle East and Iran has really created some volatility. So what can you do? You can protect yourself, sell. You can raise your stops, protect yourself with a protective stop. You can hold on for the long term, right? Because things change quickly. Again, transportation looked good until this week, the last 2 days this week. But you can also protect yourself by buying a daily bear leveraged ETF. This is called SPXS. These are designed for short-term trading and short-term hedging, not as long-term investments. Okay, these are very trader-oriented, but you can buy this to protect yourself against the downturn in the S&P 500. You can buy this ETF SQQQ as a protective measure against a sell-off in the Qs or the NASDAQ. You could buy SDOW in response to a sell-off in Dow Industrial Stocks. And there are others along that same protective ETFs like this, a financial bear, now in an uptrend. So you can buy that in response to sell-off in financial stocks. There's others, but I won't cover any more of that. Let's take a look at some of these metals funds like GLD, which is like gold shares. Not doing much over the last month. Gap down Tuesday, holding that level for now, but that could go either way in gold shares, silver shares. Similar looking chart where that is at. Closing below there, the short and medium term moving average. So I don't know which way gold or silver is going to go. Kind of neutral right now, but haven't made a new high since late January. Similar chart with copper. Okay. And let's look at this. This is interesting too when it comes to commodities going up. Corn has made a real nice move here over the last month, along with oil. USO is one of the main ETFs I watch for oil, also making a move up here over the last couple weeks. So commodities going up, interest rates ticking up, and oil creeping up, and energy creeping up here. You know, oil and gas exploration ETF in a nice steady uptrend. This does not bode well for inflation or the economy, okay? So this could have a real effect here over the next several months on growth stocks. But the agriculture fund, right, looked pretty neutral until, Wednesday, Thursday, and Friday, gap up, gap up. So agriculture stocks on the move up. Base metals fund kind of neutral right there. Commodity index on the way up over the last several weeks. And I think that's about it. I'll see if there's anything else we can show you. It's a dividend fund. Some of these growth funds like SPYG, growth stocks in a sell-off since basically February. So last month selling off in growth stocks. So if you're trying to trade growth stocks, it's going to be a tough environment right now. So that's why I want you guys to use some caution. Here's a quantum computing fund, symbol QTUM, last high, again, end of January, 1st of February, and that downtrend since that time. This is an interesting ETF representing space exploration. Pretty neutral over the last month, but hold kind of a little bit of a relative strength there in space exploration stocks. This is a Bitwise ETF related to Bitcoin. Don't recommend that one at all. And finally, another metals stock, metals ETF representing nickel miners, symbol NIKL. Last high, end of January into February, and in a downtrend on nickel, along with copper, gold, and silver. So that is the end of the overall market update. Again, volatility has entered the market. Growth stocks in general have been selling off. Energy is up. Oil up. Natural gas looks up for the time being. And commodities going up, along with interest rates slightly ticking up. So along with current war zone in the Middle East, creating a catalyst for this market sell-off. So this is pretty serious. We're just going to have to watch our investments with this bad news. And this news-driven market is going to affect your investments, at least in the short term. So thank you for watching, Laptop Trader. Thank you for subscribing. And let's wrap this up with a slide for you. Again, thanks for visiting the Laptop Trader channel on YouTube. Remember to subscribe so that you can get the latest video of what is going on in the markets. Please like, subscribe, and share if you found this helpful to you. Good luck. See you next month in April. I wish you the best. Any direct questions, you can direct those to laptoptraderphil@gmail.com. Goodbye, guys. Bye.